here is 11-5, problem 11-5. Same general setup as 10-5, right? Trial balance, except it asks you for a couple more headings. It says it wants beginning trial balance, and this is on the bottom of 470, and what it says is required for P11-5. It says beginning trial balance, transactions and adjustments, adjusted trial balance, closing entries, and year-end statement of net position. So as opposed to putting the closing entries at the bottom like we did in the other one, remember? Bottom of 10-5, you're just going to add another column for closing entries on this one. Okay? So you're going to put the closing entries in their own column. Yeah.
Can we just go through this one?
Yeah, we can.
Okay.
So you have your trial balance. I'm going to freeze this again. So you have trial balance, transactions and adjustments, going from left to right, adjusted trial balance, closing entries, and then the year-end statement of net position. Right? Same general setup. Okay? You're given your starting numbers again on page 470. You're given your starting numbers.
After closing entries.
Oh, after closing entries, you have statement of net position is what it tells you. Year-end statement of net position. Which is, right, it's just an adjusted trial balance. Final trial balance, however you want to say it. So each one is made up of debits and credits. Each one has a debit column, credit column. You're doing the same kind of analysis you did in 10-5. Okay? So, you're given your starting numbers, page 470. So those first two columns should balance. Then in your transactions and adjustments, okay, number 1, materials purchased on account, 20,000. What do you think the entry is?
Debit to inventory.
Debit to inventory.
Credit to payable.
Credit to accounts payable. Good. Debit to inventory. Credit to accounts payable. Number 2, materials used, 7,000. What do you think the entry is?
No, it's got to be credit to your materials.
Credit to your inventory.
Or inventory, yeah.
Debit to expense. Right there. And you can just make these are additional accounts, right? They're not given to you. You just need to call them whatever they are. So it could be supplies expense, could be materials expense, but it's an expense. Okay? Number 3, payroll paid, 12,000. What do you think that entry is? Payroll paid.
Credit cash.
Credit cash. Debit. Salary and wage expense. Salary expense. Whatever you want to call it. Okay. Number 4, utilities paid. Credit cash.
Utilities expense.
Debit utilities expense. Number 5, billings to departments for repair services. You billed them, you haven't collected it yet.
Credit.
Credit to
The billing.
billing, which is your revenue. Debit to, you billed it and you haven't collected it, it's a receivable. So due from other funds, right? Because as an internal service fund, you're charging other funds, not customers, not outside customers. Okay? Number 6, collections from departments, $27,900. You're collecting.
So you got the money in.
Credit
Cash.
is from
So
due from other funds.
Credit to
That would be cash.
due from
other fund.
debit to cash. Number 7, equipment acquired under a capital lease. Capitalizable cost $8,000 and initial payment $300.
So you paid $300.
So credit to cash $300.
Yeah, debit.
Debit to equipment for $8,000, and the remainder goes where? Obligations under capital lease, right? A liability. You put capital lease payable, okay. It uses the term obligation in your chapter. Number 8, subsequent lease payments $1,000, including $100 interest. What do you think the entry is? What's happening?
I see that.
Cash, debit or credit cash for $1,000. Debit what? What am I paying?
Interest expense.
Interest and a lease.
Interest expense
Interest expense.
and
Obligation.
lease obligations on a capital lease or a capital lease payable. Right? Okay. Number 9. Depreciation on lists buildings and equipment. Buildings 2,000, equipment 4,000.
You debit your expense accounts for both of them. and
Right.
Credit your accumulated depreciation.
Right. Okay? Same as you would normally do. Number 10. Payments on vouchers payable. 30,000.
Vouchers payable.
Debit your
Yeah.
vouchers payable and
Okay.
credit your cash.
Okay? And that's it. Those are your transactions. Those are your adjustments. Now you have adjusted trial balance where you add, right? Formula. Starting number. Plus or minus the changes. Gives you your adjusted trial balance number. Then you have closing entries, which affect only your revenue, expense, and net position, right? So your net position is your revenue minus your expense. In this case, your net position credit is $900 because your revenue is bigger than your total of your expenses by $900. Same closing entry we did before. And then your year-end statement of net position, everything's going to be the same as it was in your middle grouping adjusted trial balance, except for net position. Right? Net position is the only thing you change. So it's going to be $900 greater. Okay? Letter B asks you to prepare a schedule computing the amounts reported for each of the 3 components of net position. You only have 2 components in your net position. So you only have 2 columns, same kind of table we did in the previous problem. What's unrestricted, what's net investment in capital assets.
Can you go back up to the top when you're done that? And
Sure.
Show me your columns again that you did. How you labeled them.
Sure, you want the headings?
Yeah.
The headings are given to you in your book too. Trial balance,
Adjusted.
transactions and adjustments, adjusted trial balance, closing entries,
You use every letter.
and year-end statement of net position.
A to Z.
Stepping it out. Okay? Any other questions?
Part B headers.
Part B headers. Yeah, it's the same, Sean, it's the same as the other.
It's the same, I didn't get it copied on the last
Yeah.
page.
Okay. Yeah, it's the same. So once you get it, I would just copy it. And adjust, you know, if there's an asset or liability that goes in this one that doesn't go in the other one, you know, you adjust.